first of all, to your listeners, the strategy you just described is an excellent way to make money in land, right? Finding that end user, the big builder, moderate sized builder who only wants a fully entitled and ready to go parcel, and then going and doing that work. You can make a ton of money doing that.
The 1031 exchange, sometimes it's frustrating, especially if you are a dealer, right? Because you no longer qualify for the 1031 exchange. Plus, 1031 exchanges means you have to hold it for a year or more, right, to establish the long term. But if you're doing for the less, it becomes taxable. There's a little niche in between there. There are those that are not holding it for a year or more, and there are those that are also not dealers, and insert the deferred sales trust. So if people want to defer capital gains taxes, we did a couple of these deals in Texas, 46 million in total land exits. They tied the land up, they improved the land, and then they sold the land all within a year, but they weren't doing so many transactions that they became a dealer. They used the deferred sales trust to defer that ordinary income tax. So if anyone's listening to this, you can do that. The 1031 exchange does not solve that, but a deferred sales trust does, and it works for land flips and or kind of like land banking, in the sense that you're tying it up, you're improving it, and then you're selling it for a profit in a short period of time. You can go to capitalgainstaxsolutions.com. Dan, what are your thoughts when you hear about that, and like what comes to mind for people who might be in the land business and or just any real estate business, but they're having huge capital gains taxes and they're tired of having to chase that next large transaction via the 1031 exchange, and they can diversify with the deferred sales trust?
Yeah, well, first of all, to your listeners, the strategy you just described is an excellent way to make money in land, right? Finding that end user, the big builder, moderate sized builder who only wants a fully entitled and ready to go parcel, and then going and doing that work. You can make a ton of money doing that. Number two, no, I think that's excellent. I've been doing cost segregation on some of my buildings to help save in taxes, but if I were doing the strategy that you just described and I commented on, I would absolutely, DST sounds like the way to go.
Absolutely. And for the cost seg, by the way, I'm curious, are you using that to offset the ordinary income taxes on the dealer side of it?
Yep.
Yeah, so the passive and or the active, because you are a real estate professional, meaning that you're basically spending 750 hours or more in the full time of real estate investing, is kind of a general rule there, and or your spouse is doing that if in case you have a different job. You can look that up as well. Look up cost segregation and or real estate professional. That will help each of you who are listening to this to defer capital gains taxes and or offset ordinary income tax potentially, but check with your CPA. Every circumstance is a little bit different.